Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 7th through Friday, March 11th, 2011. Well, folks, take a look. You are looking at a live futures chart right now. You can see initially we just opened at 6 p.m. Eastern Time, just a little bit after, and right away the futures are just upticking ever so slightly. We're at the highs of the first 10-minute candle of the overnight session here, up 1 point on the ES futures. And again, we saw a major amount of volatility. Look at the market on Friday. This is the market on Friday according to the futures. Very, very sharp downtrend, although you did get a buy program into the end of the day, pushing the futures up to close really off their lows substantially. We're going to flip over to the SPY. You'll see it even clearer here. Look at that buy program, a 3-bar surge in the last 30 minutes of the trading day. Again, light volume on Friday towards the afternoon session enabled this, and again, a 1, 2, 3-bar surge, really limiting the losses quite dramatically on Friday's session. Nonetheless, it's been a wild market. Again, things in the Middle East, Northern Africa, nothing better there. Again, everyone is now just tuning in to see where oil is trading. Where is oil trading? And that's what we're going to watch overnight. You have to watch this into Monday morning, Tuesday, Wednesday, Thursday, Friday of this week. That's the major caveat or the major issue in this market. If oil goes up, markets are going down. If oil goes down, markets will go up. Nothing else matters, and I'm being dead serious here, folks. You might get some economic reports this week. If oil makes a major move, no one's going to care about the economic numbers. I'm telling you that right now, straight up. All right? So again, watch that closely. Keep an eye on oil. And again, you can see what happened to the USO on Friday. It just basically started with a gap up, went sideways up the whole rest of the day. The USO, interestingly enough, and this is very, very fascinating here, folks. Take a look what's going on here. You pierced the double top from 2010, and that was made in April of 2010, just a little bit less than a year ago, and right now that's where we pushed into. Now that's actually resistance up there, but the problem is you're talking about shorting something when you're not dealing pure and simple with technicals. You're dealing with unknown situations in the Middle East, which again, if something happens in Saudi Arabia or something in other areas of the world, could dramatically change where oil goes. Now normally if you saw this chart, you'd be shorting oil. Based on the closing level up here to the double top, it would be a short. But again, the problem is you're not just dealing with a technical chart here. You have to factor in what's going on over in the Middle East, and that's telling me not to be a buyer here at these levels, but at the same time, it's telling me to be super, super careful and not really short oil either. And again, it wouldn't be surprising to see a pullback on oil this week by the end of the week. But again, the high risk level there is just too much for any normal or smart trader to deal with. All right, as we speak, folks, futures are up 1.75 here. And again, this could all change by tomorrow morning as oil moves around. We're going to keep track of oil overnight. And again, tune in to my Twitter account. You can find me on Twitter, Gareth Soloway on Twitter. And I'll keep you guys posted all night as I continue to analyze the markets in the overnight session into Monday morning. All right, taking a look here, folks, at a couple other things. Let's find out what the SPY was showing us pattern-wise on Friday. If we zoom out on Friday, I want to show you the whole entire week. All right, here's your whole entire week. Essentially, you went from the 28th of February into the first of the month, second, third, fourth. That's Monday through Friday. Look at the volatility you're dealing with. I remember a month ago, folks, we were complaining, and a lot of people out there were complaining, oh, this market's so slow. And we kept on saying to everyone, it's going to pick up. There will always be something that kicks in the volatility, and sure enough, it did. Now, again, the key is to trade it appropriately. Find the levels, find the double tops, find the double bottoms, find the patterns, prices, and time, and that will enable you to do that. And that's all available in the Research Center, folks. And again, you can take a free trial. Yes, there is a free trial of the Research Center. It includes everything underneath the Research Center, as the whole Research Center is included. And again, you can take a free trial for 1 week, and if you like it, then you stick with it. Otherwise, you can cancel it, no problem at all. But nonetheless, take a look at the volatility here. I mean, the 28th, which was last Monday, a pretty quiet day. You had a little bit of choppiness, but it ended flat. Tuesday, we had that gap up, and again, then the major drop all the way back down off that gap up on Tuesday. Wednesday, choppy session, reversal on Thursday with a major move, one of the biggest moves up on the Dow for the year. I think it was the biggest move up on the Dow. And then Friday, reversal. I mean, the wild markets here, folks. And this is, again, great for day trading. If you're in the intraday stock chat, it's just a fantastic trading environment. All right, let's look at the 60-minute. One thing I've been pointing out to the 60-minute chart here, which I thought was very, very fascinating, is take a look at this 200 moving average down here. In fact, we can remove this green line for now. The 200 See here, you hit it, you bounced, you pierced it, closed below, but never confirmed below the 200. Therefore, that's a reversal signal, and you move back up, came back here, never confirmed, traded along the 200 moving average, went up, and then came back down, touched it, and by the end of the day bounced up. So this 200 moving average, without confirmation to the downside, is what you're really watching for this week on the downside. If you can get below the 200 moving average right here, which is the red line on the 60-minute chart, and confirm, I believe truly you will have a breakdown in play and the markets will go lower. Now, if you do not confirm, as long as you stay above this 200, as far as I'm concerned, you could easily go back to the high of the February 18th double top pivot high here at approximately 134.69 to 70. All right, so again, just really, in my opinion, watch for that. I mean, that's so important. In addition, folks, you could make a case that you actually have some key trend lines all the way down here. If you want to stretch this up underneath, you can make a case that that's also a line, but that kind of coincides with the 200. Essentially, you're looking for confirmation. If you don't know what confirmation is and you really want to learn it because it's one of the best indicators we ever invented or has ever been invented out there, and again, we came up with it through hard work here at In the Money Stocks. You want to join the Research Center. We cover it in the chat room, and I'll just briefly tell you right here, it's a closing pivot low below a breakdown, and then the next candle must close below the low of that breakdown candle. That's the simple answer. And again, if you want more information, take the free trial of the Research Center or the Intraday Stock Chat and get involved. Start taking command of your future in terms of profits in the market. All right. Now, again, if we rally up, this is your target right here. That's going to be your double top. Notice how we've kind of been floating sideways. It's almost a very choppy bear flag inside of this big down move, which, by the way, was a confirmed down move on the daily chart, and that's why it's been so weak. Every time you bounce, you're having hard sells. Every time you bounce, hard sell, because that's a confirmed move to the downside. All right, daily chart we'll quickly look at, and you can see for the most part the long-term trend is still up. Yes, you've had a nice little reversal here, but until you really break down and have a different trend develop, this is now just on the daily chart alone, yes, confirmed to the downside, but very weak because the long-term trend is still up. So we're really watching to see if there's a change of pace here and what happens. Futures still up about 1.5 points. Again, we'll watch that all overnight. I'll update you on my Twitter account or you can find me at Gareth Soloway. And again, that's my name. And again, Chief Market Strategist here at In the Money Stocks. I opened a Twitter account from popular demand last week, and it's been a good thing. I think it's been a great thing connecting to all our viewers, our loyal members at inthemoneystocks.com, the growing base of support out there, and the unified kind of learned trader and investor. And that's really what we cater to. You know, not the lazy pikers out there, the hardcore people that are willing to learn, because we can teach you and it will blow you away, and the profits will follow. All right, let's go to a couple other things here. Obviously, we want to take a look at oil. Oil, again, folks, I think the big thing on oil, just to note this USO chart, is this double top. Again, do you want to short it? It's a tough one right there because you're dealing with what you're dealing in the Middle East. I personally didn't short it, even though we talked about it in the Research Center as a possibility. I said to my members, it's really too high risk for me to do at this point. I'll keep an eye on it, though. So again, you can see that double top from 2010. Even if you go back to 2009 right here, a little bit of a pivot high. If you get through that level, where's your next point of interest? Believe it or not, I think it's at 45 right here. This is going to be your next spot based on a pivot on the chart. $45 approximately on the USO. And that's if we continue to rally up. So keep an eye on that. Futures now up 2.25 as we continue to watch. All right, let's take a look at silver and gold. I think those are major keys for this week because of how they've been behaving. Gold's been in an impressive uptrend. Again, beautiful uptrend. We got above the double top here, and this is another confirmation or lack thereof. Notice how you got above this double top, triple top area here at 139.50 approximately, and then you closed above, the next candle did not confirm. Notice how this candle did not close above the high of the breakout candle the next day. Therefore, that's lack of confirmation. Oftentimes, that tells you there's a reversal taking place. And look at the short-term reversal to the downside, and then it bounces back. All right, so you're still watching to see. You still have no confirmation above this double top yet. Could it happen this week? Sure. If things continue to be destabilizing in the Middle East, then absolutely, probably gold will be higher. If things quiet down, gold could really come in here after failing to confirm to the upside. 2.75 up on the futures, now 3 points up on the futures. Market's having a nice little bounce, and this tells us that oil is probably trading down just a tiny bit, and it looks like it is here in the overnight session before the markets open on Monday morning. And again, just follow oil all week, folks. If oil pulls back, this market should rally up, and vice versa. If oil makes a move higher towards 110, this market's going down. Just that simple. I know it seems so simple, but it's such a scary thing because remember, you're dealing with the fact that this is a fragile recovery. It's not like the markets are really roaring in terms of jobs. It's not like the unemployment rate is 3% or 4% here. You have an 8.9% unemployment rate. That's not good. It's even higher if you want to count people that have part-time jobs that would like full-time or have just given up on looking for jobs. That's estimated to be 15+% if you take that number. And overall, yeah, people are now trusting the market again. The amateurs are back in the market, which is also a scary thing, but nonetheless, that's helping the market stay afloat here with oil moving higher. But remember, for every $10 or so on oil price in terms of move up in oil's price, you're losing 0.5% of GDP. And that's the thing that the Fed is not liking right now. And again, there was talk that the government may release strategic oil reserves, and that can be a definite possibility in terms of trying to keep that oil price down if they release some of those strategic oil reserves. All right? So we'll watch that very, very closely. Let's see what else is going on here. The SLV. The SLV is a monster, an absolute monster. Now, the crazy thing about it, I've noticed that more and more people are getting bullish on this to the point of exuberance or rational exuberance. Yes, it could go higher here. I think it wouldn't be surprising to me to see maybe a little bit of a gap up tomorrow as well on Monday. But the question is the hype now built in? And now you're going to have the amateurs kind of left holding the bag. And that's my big fear here is you really can't go long this. I mean, it's such an overbought chart just since really late January, this has gone from 26 to 30, almost $35 per share. That's a huge move. Absolutely huge. Now, granted, there's talk about JP Morgan and HSBC being caught in a short squeeze and so forth, but I don't really, you know what, that may be some of it, but chances are they've already moved out a majority of what they needed to already, and now it's really being driven on the hype, which, as we know, when the amateurs jump in, that's when usually the top is in. So the question is again, do I think it could go a little bit higher? Yes. Do I think it's near a top? Yes, I do, in terms of a pullback. And I know that's gutsy to say on my part, but that's how I've made my name, folks. I've made my name in terms of being gutsy, making the hard calls when no one else is making the hard calls, when everyone else is bullish, sticking my neck out and becoming bearish. Now, again, if you get a gap up tomorrow, I do think that could be a pivot top being put in right around the $35 level on this SLV. One of the reasons why I like the 35 and change level on the SLV is because it's actually a perfect double from the consolidation base here at around 17 and a half, $34 to $35. So that's 100% move up. 100%, that's an even number in terms of gains. I do think that's interesting. Also, the $35 an even number as well. So the SLV is a very, very interesting watch this week. I think there will be some major moves that we will be watching overall. All right, we talked about the USO, we talked about gold, we talked about silver. Let's take a look at the dollar. Now, the dollar has been one of the most amazing changes in how it's behaved. When you have this instability in the Middle East and Northern Africa, usually we'd see a rush to the dollar. Money would flow into the dollar would be ripping up. The dollar has done nothing but drop. Take a look at that drop, folks. Nothing but drop. So what does that mean? Well, it means the reserve currency, when instability breaks out, is no longer the dollar. It looks like it's pure and simple gold and silver, and maybe a couple other little small things out there. But for the most part, the U.S. dollar has now changed. This is a historic change, something you will look back on in 20, 30 years, 50 years, and say, wow, remember when? Because the dollar has been a reserve currency, a flight to safety for so long. To see this action is very, very unusual. Now, having said that, it did come into a double bottom here, and you have to start to think that, okay, maybe it's a little bit of a bullish tendency now based on the fact that you're at a double bottom. Now, if you get below this double bottom, we look for confirmation to the downside. If you get confirmation to the downside, it could go lower. But right now, anyways, folks, double bottom in the dollar, and this is a major double bottom going back to November of 2010. There should be some support here, I would think. All right, the question is again, how long does it hold up? It got a little bit of a bounce right off that level on Friday perfectly. I called this out at 2190 perfectly to the research center members. It hit that on Friday and bounced back to 2194. So far, it's holding. But again, does it break lower tomorrow? Does it break lower Tuesday, Wednesday, Thursday? And then again, the big thing after it, if it does break and doesn't bounce, you're looking to see, does it confirm? And that's really what it all comes down to, folks. All right, confirmation. Learn that, and you will start to become a rich person, in my opinion. And again, we teach it in the Research Center. Come join the Research Center free trial. Come join the chat free trial. It's there for the taking, folks. We put it out there because a lot of people had always asked us for a free trial. Our service is good enough where we believe people take the free trial. They're going to continue with us. Bottom line. Because again, the money is there to be made if you just put a little bit of learning to it. A little bit. Most, believe it or not, a majority of people out there are weaklings. They don't like to learn. But for those out there, and that's what we cater to, the more learned investor, the person that is actually willing to spend, 30 minutes a night looking at charts, they're going to be the ones that profit and make millions, if not billions. All right, folks. Again, that's a very interesting setup. Right now, futures up 2.25. We're still fluctuating. Keep an eye on oil overnight. Every night this week, keep an eye on oil. Again, economic news is more on the back burner at this point. Keep an eye on the Middle East. What's going on there? Does it spread to Saudi Arabia? And again, folks, join the Research Center. Join the chat. Let's make some money. Take care.